Hi, I'm Wal Galbraith. I'm a part of the Ray White South Coast Group, and this is your South Coast Snapshot for week 16, 2023. The snapshot is designed to give you a bite-sized breakdown of the real estate market overall, including local, regional and city-based information across Australia. All information is sourced from the AFR, leading economists on Twitter, and the Sydney Morning Herald. All information is relevant to buyers, property owners, or both. According to the Treasury's annual tax benchmarks and variation statement released in February, the 50% capital gains discount enjoyed by individuals or trusts that sell an asset owned for more than 12 months was the third largest source of lost revenue last year. The concession amounted to $17 billion in 21-22 and is forecast to cost just under $55 billion over the next 4 years. It would obviously be politically hazardous for the government to target the legions of mum and dad investors who have poured their savings into buying an investment property or small business. Forcing the punters to pay a higher tax rate on any capital gains they make from selling their $1 million investment property would spark a huge backlash. But there is a strong argument that Chalmers should follow the lead of the Biden administration and reduce the capital gains discount for wealthier investors from the current 50% to say 25%. Australia faces years of extreme rental and housing pain as the nation confronts a shortage of 106,000 dwellings by 2027 due to high interest rates, soaring immigration and community opposition to new homes. While new figures show dwelling values climbed 0.6% in March after almost a year of falls, a report by the National Housing Finance and Investment Corporation, NHFIC, forecasts Brisbane alone will be short of 12,300 dwellings within 5 years, while Sydney will be short by more than 10,000. The country is already facing extreme housing pressures, with rental vacancy rates in every capital at or below 1%. Delays and growing costs hitting the dwelling construction centre, while bad weather throughout 2022 slowed building periods. On Friday, building firm Porter Davis Homes collapsed, stopping work on 1,700 projects in Victoria and Queensland. It has also signed 779 contracts with customers where construction has yet to start. Driving the increase in demand is high net migration, which this year is expected to reach 350,000 as overseas workers and students flood back into the country. Sydney has swung from a forecast surplus of 16,900 dwellings to a shortfall of 9,600. Melbourne has improved slightly from a shortfall of 6,200 to 1,900, and Brisbane has deteriorated from a forecast 3,300 surplus to a 12,300 deficit. Another factor is caused in charge of demand by the pandemic, which an extra 341,500 households created since mid-21 as people moved out of share houses or family homes to be on their own. The Reserve Bank of New Zealand's surprise outsized interest rate increase underlined it is taking no chances with inflation, even if that means causing a recession, at odds with its Australian counterpart, which is more concerned about averting a hard landing. The NZ dollar soared on Wednesday after the central bank defied expectations by lifting its cash rate half a percentage point to 5.25%, wrong-footing investors who had bet it would slow the pace of tightening. On Tuesday, the Reserve Bank of Australia kept rates on hold. Bond futures ramped up expectations of further tightening in New Zealand, implying a peak of 6.1% by July, nearly a full percentage point higher than before Wednesday's policy decision. New Zealand's 2-year swap rates, which closely reflect interest rate expectations, leapt 11 basis points to 5.1%, and New Zealand 2-year bond yields jumped 13 basis points to 4.71%. The Royal Bank of New Zealand raised cash rates to the highest level in 14 years, citing still too high inflation. Tenants across regional New South Wales are facing record high rents, which are pushing locals and much needed workers out of their communities. House rents across regional New South Wales overall jumped 10% over the past year and increased 1.9% over the past 3 months to a median weekly asking rent of $5.50 per week, the latest Domain rent report shows. Regional unit rents increased 7.7% over the year and 2.4% over the March quarter, lifting the median to $420 a week. While the pace of regional rent hikes is slowing, some regions continue to record price spikes due to turbocharged pandemic-era demand from sea and tree changes spilling from overseas neighbouring areas. The Cootamundra-Gundagai Regional Council recorded the largest increase in asking rents, jumping 25% in the year to March. It was followed by Federation Council area and Singleton Council area, which both jumped 14.9% in the same period. While regional rents for houses and units reached fresh highs, the pace of growth has begun to slow. About 16% of households with a home loan are in mortgage prison, unable to refinance to a lower rate because they do not meet the tough serviceability assessment rules the Reserve Bank of Australia has revealed. The central bank has also realised new analysis showing that almost half of the nation's poorest borrowers could be in mortgage stress because of the high interest rates. The RBA's semi-annual review of financial stability says rising interest rates mean an increasing number of existing borrowers that cannot pass bank serviceability assessments, which tests a person's ability to cope with a 3 percentage point increase in interest rates. It means hundreds of thousands of households are stuck with their existing lender and unable to directly reap the benefits of strong competition in the refinancing market, with banks offering discounted interest rates and $4,000 cashbacks. The RBA also revealed the growing financial pressure facing the nation's lowest income borrowers, with mortgage repayments forecast to consume a record 9.8% of household disposable income by the end of next year. About 45% of the poorest quarter of households with a mortgage are spending more than 30% of their income on repayments, which is considered a proxy for mortgage stress. If you're looking to make the best use of the current marketplace or considering your financial options, if you're either expanding your property portfolio, refinancing or looking to sell your current property, get in touch today, we'd love to help. I'm Wal Galbraith with the Ray White South Coast Group, and that was your South Coast Snapshot for week 16, 2023. Catch you next week. Be well.